Well, hello, everyone, and welcome to your Daily Five. I'm Joe Duarte from Joe Duarte and the moneyoptions.com, where you can get my Trading Options for Dummies books and my Everything Investing in Your 20s and 30s books. You can also find my books at the StockCharts.com bookstores. And don't forget, if you like what I do, get a free 30-day trial subscription to the website. Well, let's get going today. I want to talk about 5 must-know factors about selling covered calls. And I want to piggyback on a recent presentation I did that you can find on YouTube and StockCharts.com on the Options 101 presentation week. So this is addressing some of the questions that were raised in the comments. So before, like every other time, before we do anything, we want to look at our sound trading principles. Of course, we don't want to fight the Fed. You don't want to fight the market's momentum and the dominant on-the-ground trends. You want to stick with those strong sectors and stocks, trade in small lots, including options. If you're trading 3, 4, 5 contracts at a time, sometimes the volatility will get you. So especially when you're getting started, trade small lots, and that means about 1 or 2 contracts at most. If you got in stocks, partial profits and 20% gainers, take them. In options, you might want to let them go a little bit more and cut the profits and cut the losses a little bit short if the option is very volatile. You want to monitor those lagging sectors for potential turnaround candidates, and of course you want to manage your cash wisely. Let's have a quick look at the market where things are so we can plug into the options conversation I'm about to have with you. We are currently in what looks to be the possibility of a consolidation market. Okay, and we're going to focus on the advanced decline line here. Of course, we use the advanced decline line because the advanced decline line is very difficult for the algos to rig. So this is as true a trend of the market as we can find. Still in a bullish trend, but perhaps we're getting into a consolidation pattern. Of course, complexity zone means things are good. Chaos zone means things are bad. And the edge of chaos is that broad band between the 50-day and 200-day moving average that kind of sets up big moves in stock. Certainly, if you get above that band, things tend to go well. Get below that band, things can go wrong. So let's get to this, okay? Buying options gives you rights. Selling options gives you obligations, okay? That means when you sell an option, if certain things happen, you might have that stock taken away upon expiration or before that, and that's called assignment. Now, options, of course, are designed for risk management, and they are created on demand, usually by market makers. They offer the ability to trade the underlying stock with less risk, which means that you can spend less money in most cases and still participate in the move of the underlying stock. Remember, calls rise in price when the underlying stock rises, and you buy those calls when you're bullish. Puts rise in price when underlying falls, and you buy puts when you're bearish. Selling options is a slightly different bird, and it produces income. And you sell calls when you're bullish, but your stock isn't rising. And there was a comment on my presentation that says this was confusing. So here's the clarification. When you're bullish, it means you're willing to own the stock. Okay, it doesn't mean that stock's going to go up 20% in 3 days. It just means that you are bullish on that stock. But since the stock isn't rising, then you are going to do something to help pay for the time you're willing to wait. And that's what selling calls is about. So I hope that clears that up. Of course, you sell puts when the stock has a limited downside, but I'm not talking about selling puts. I'm just wanting to talk today about selling calls. Now, specifically, I want to talk about selling covered calls. That means that you actually own the stock and you're trying to get some income as you wait for the stock to rise. It's also known as a buy right strategy because when you initiate that strategy on its own, you are buying the stock simultaneously as you sell the call. And of course, your broker has a drop-down box in the menu, a menu and a drop-down box, which lets you do that at the same time. You don't have to do it separate. Now, this is best suited for flat markets, for stocks and consolidation patterns, especially when something is about to happen in the future. And again, it's an income opportunity. and it pays you for being patient as you wait for that stock to rise. So here's the key. First question you want to ask yourself is the stock in a consolidation pattern? Then you want to look at historical volatility, which is a measure of the underlying stock. You want to see if it's if the implied volatility is well above the historical volatility. So this is a little bit misleading here, but make sure you understand. Is the implied volatility above the historical volatility? So if those questions are answered, then you would simultaneously buy 100 shares of stock while selling a slightly out of the money call option with 45 days or less to expiration. And you want to have those things specifically, because if you buy or if you sell an option that's got more than 45 days, then it could turn into a very bumpy ride. At 45 days and below, the time value of the option starts to erode, and that means that the odds of the trade going your way are much higher. So that's the 45 days. Okay, so I want to look at a specific stock that looks interesting right now. This is Monster Beverage, and Monster Beverage is a stock that I own and I recommend it on my website. In fact, we recently had a call option on it that we bought, and then we made some money on. But now the stock looks to be entering a consolidation pattern, as you can see over here on the right side. Now, here's where we get into the chart analysis. And again, I want to reinforce these things that we talked about in the Options 101 presentation that I highly recommend as a reinforcer of this presentation. Okay, so look at this thing quickly. Trying to enter a consolidation pattern. We have a earnings report coming up here on April 27th, so people are starting to get a little bit jittery, starting to bounce around sideways. Accumulation distribution is good. People are still willing to buy the stock, but you're seeing a little bump here, so there's a little bit of selling, and it's showing up in the chart. Same thing with on-balance volume. Again, generally bullish, but some back and forth here. And here's the key. ROC tells you that momentum in the stock is starting to fade a little bit, thus the consolidation pattern. And here's the key for this one. RSI is near 70, which means it's overbought. That means this stock is going to have a hard time getting much higher than 98 or 99, okay? Now, here's the kicker. You have a consolidation pattern. Historical volatility for this stock is 16, but implied volatility is 27. That's the key right there. This is an option that this is a stock that you want to consider selling an option on. Okay, so to recap, selling a covered call is an income producing strategy that you use when a stock goes into consolidation pattern. And you're still bullish on the stock because that chart, if you're not an options trader, looks interesting, and you certainly might want to consider buying it. And like I said, I still own the stock, but I can see that it's going into a consolidation pattern. So I'm going to consider selling a call on it to buy myself some time and not sit there with dead money. Next, it's got a high implied volatility compared to historical volatility. That means that this is a expensive stock at the moment, and therefore it's not likely to rise very much. So the odds favor a buy right strategy. And you want to use that expiration date that's 45 days or less. That's all I have for today. I'm Joe Duarte from Joe Duarte and the MoneyOptions.com. Consider a free trial to my website, Joe Duarte in the MoneyOptions.com. Catch me at the Money Show on June 10th in Orlando. Have a great day.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.